Today something terrible happened. The stock of Pacwest Bank fell by 27%, only to rise again by 25% afterwards. What followed was, as always, a charming solution. Another bank, Banc of California, absorbed Pacwest, a bank that is also struggling. You can find out more about what's behind this in this video. On July 25th, Pacwest Bank released its quarterly results, revealing a net loss of $205 million. Billion-dollar losses in previous quarters weigh heavily, so what is going on here? Particularly critical is the upcoming 0.25% interest rate hike by the Fed today. We will make a video about that. Tomorrow, the ECB will also raise interest rates. With these interest rate increases, it becomes increasingly difficult for banks to generate profits. The bonds that were bought in large quantities are now becoming increasingly worthless. This is the ticking time bomb. The higher the interest rates rise, the less the bonds are worth. While inflation in the USA has already declined significantly to 3%, it remains at 6% in Europe, where the USA could have already implemented an interest rate pause, as was the case in June. However, they do not want to do that. The Fed will raise interest rates again today and probably in 2 more steps, as the Fed director announced. This predicament will bring down more banks. This can also affect European banks, as we have seen with Credit Suisse. So, the trigger was seemingly harmless quarterly reports. What can we expect in this quarter? Deposits at Pacwest fell by 18% in the last quarter. People withdrew their money because they were worried that the bank would not survive. The rumors about Pacwest had been circulating for a while. Now a buyer has been found for the purchase of the regional bank. The bank will merge with Banc of California. The bank will then be acquired by a committee. As part of the deal, private equity firms Warburg Pincus and Centerbridge Partners will invest for $100 million and hold around 20% of the merged company. They will also have the option to acquire additional shares. Banc of California and Pacwest announced their intention to sell parts of their businesses to strengthen their liquidity. The merger aims to create a robust, well-capitalized, and highly liquid institution, according to Jared Wolf, CEO of Banc of California, who was a former manager at Pacwest. Experts predict a wave of consolidation among smaller and medium-sized banks in the U.S. in the coming months. Additionally, the ongoing weakness in the commercial real estate market poses a challenge. Regional banks reportedly hold about 70% of commercial real estate in their portfolios. If loans for these properties continue to default and prices decline as economists expect, it could further intensify the pressure on the banks. The Fed will most likely have to print money to save them. Inflation is about to rise. Thank you for joining us today as we explored the recent developments in the banking world. The acquisition of Pacwest Bank by Banc of California has raised many questions about the challenges facing smaller institutions in the face of economic uncertainties and interest rate hikes. As we've seen, the impact of financial decisions and global economic trends can have far-reaching consequences. We'll continue to keep a close eye on these developments and provide you with further insights and updates. If you found this information valuable, don't forget to like and subscribe to our channel for more in-depth analyses and discussions on finance, economics, and business. Stay tuned for our upcoming videos as we delve deeper into the intricacies of the financial world.